Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Dave Ross. 419-794-3030 is the phone number. The website, arhq.com. Last year, we heard over and over that there were just a few stocks holding up the market. They call them the Magnificent Seven, but hold on. Here's wealth advisor Holly Newman-Croft on the Barron's Roundtable.
This rally is so concentrated. 80% of the market returns are coming from 10 stocks. So I think as we look out to 2024, there's a lot of value to be found in every asset class. And what's really important is fundamental analysis, active management to identify those companies that have been really just looked over for those 10 magnificent 10, if I can coin a new term.
So there's got to be more good performing stocks out there. Can you help your clients find their own Magnificent 10 or maybe even 15 or more?
Yeah, I think, when you look at where to invest for 2024, I do think that there's going to always be opportunities out there. I mean, even if the market as a whole has a challenge, there's always going to be a way to find some of those diamonds in the rough. So here we're, headed into an election year. So the first thing is what we can do is we can use kind of history as a guideline. So historically speaking, if you look at the S&P 500 index, which is just an unmanaged index that is reflective of 500 companies here in the United States, historically speaking, in an election year, the markets tend to perform well. So, roughly 80% of the time since the S&P's been around, the markets have done good. Now, shorter term, we did have a really strong rally in 2023. And in fact, leading up, we had a really nice what's called Santa Claus rally in the end of the year. And so, short term, I think the market tends to be a little bit concerning. In addition, if we look at right now in this environment today, what I would say is that, we still have an issue of inflation. I know the inflation numbers are coming down, but it really, I think, has impacted a lot of individuals and, what their savings and spending habits are. If you look at like Y Charts, which is a website that lists information about the U.S. personal savings rate, most recently the savings rate is at about 4%. So Americans are saving a lot less now than what they have historically speaking. So the concern about that is if Americans are saving less and they're worried about inflation and some of the areas that are out there, you've got to be somewhat careful on where you go into. Now, who's not afraid of spending money right now and who cannot stop spending money is your uncle, right? The IRS, Uncle Sam, the federal government. And so when you look at that, there could be some sectors that could benefit from the continued government policies and spending that's out there. Infrastructure, healthcare, industrials, cyclical stocks in sectors that are expected to benefit from government spending, those infrastructure projects, could continue to see increased demand. Also what I like this year is I like dividend-paying stocks, especially for those sectors with some of the stable cash flows, companies that have strong balance sheets. They could be attractive for investors that are looking for income during periods of time of uncertainty. So if you needed to live off of the dividends, the day-to-day noise of the stock becomes a little less important when you're living off of those dividend stocks. Utilities and consumer staples. So if you wanted to be a little bit more defensive, those could be areas that are defensive sectors, often considered a little bit more resilient in economic downtimes, periods of uncertainty. They're what I call daily essential companies, so things that people need regardless of whether the market's in a turmoil or the economy's in a recession and what happens there. Those sectors provide essential goods and services that tend to be a consistent demand. And bonds would be another category. If the Federal Reserve does like what they're talking about, which is lowers interest rate this year, because bonds got beaten up in the past, this could be an area now that rates have gone up, now that those bond prices are down, over a 3 to 5 year time frame, could be an area that benefits from that as well. And then precious metals and gold, maybe not a major asset class that we typically have, but precious metals, particularly gold, often are viewed as more safe havens during times of uncertainty. Investors, can allocate and try to hedge against inflation in those economic uncertain times. We have a lot more that we talk about this as well with our philosophy. It's called the independent income system. So the independent income system, it talks through where I see different threats and opportunities in the marketplace today. So If you haven't looked at that video and you want more information about where to invest and how to position your accounts, just go on Google and type in independent income system. And there's a great video that goes and walks through that as well. Now, Dave, I know you serve on the investment committee and you do a lot of private portfolio management for your clients. And like me, had decades of experience in this industry. When people are asking you the question of where to invest for 2024, what are your thoughts?
Well, I'm a great believer in taking advantage of blue chip companies that pay stable to increasing dividends. It's funny, when people talk about the stock market, they tend to focus on, well, we're looking for the next 20, 30% gain. Well, if you look at the history of the S&P 500, about half of the return comes from dividends. So if you're close to retirement and you have a portfolio of investments, it's a very worthwhile thing to take a look at how much of your retirement income should be coming from dividend-paying companies and stock portfolios. So Nolan mentioned daily essentials. A lot of the consumer staples are dividend-paying stocks. Everybody kind of wants to focus in on what the next big thing is. And I think a lot of times worrying about or trying to calculate what the next big thing is, you really look past the obvious, which is there are a lot of companies in the United States and abroad that are doing quite well. And by just having a diversified portfolio in all of these different sectors, helps you mitigate risk. It gives you the opportunity to capture as much of the upside of the market and really minimizes what happens when it's dropping, when the market as a whole is dropping.
So, there are some good things to take a look at. There's, some categories where you can kind of lean in, lean out. Overall, if you look at a lot of the studies that are out there and you determine, what some of the characteristics are when it comes to being a successful investor over the long term, you want to take into consideration that stock picking tends to be a very small percentage of that over the long term. You want to look at the key characteristic is what I would refer to as portfolio optimization, meaning is your portfolio constructed in a way that gives you the ability to achieve the highest potential return for the level of risk that you're willing to take? And the amazing thing about, 2024 is the technology that's available today. One of the things that we can do is put together an investment policy statement for you. We can take all of the holdings that you have in your accounts, and Dave and I absolutely can spend time talking about any individual positions that you have. But by putting it in there, what we can do is we can determine, how is your portfolio constructed based upon the level of risk, and does that level of risk line up with who you are as an investor, and making sure that that meets what that criteria is. The things that it'll tell us in a normal 6-month time frame, what are the typical ranges of return? So these are what I would refer to as the guardrails. So if things go bad this year, what's the normal 95% of the time bad look like? If things are good this year, what does it look like, again, 95% of the time? We can stress test a portfolio. If you're thinking this is going to be the big one, this is going to be another major crash, or if another major crash happens one day, what is the maximum drawdown that could, be experienced in your portfolio? When you have that analytical data, it's going to allow you to adjust your portfolio, and it's going to be able to, again, help address the question of, where should you invest your investments? There's a lot of times when I look at portfolios and we do the analysis, what I also look at as a great feature is what's called the upside downside capture, meaning when things are good, how much of the portfolio is going to participate in the good stuff? And when things are bad, how much of the bad does it take? A lot of times when I do an analysis for clients, their numbers, when we put it together, obviously we work towards that improvement, but before they come into the office and we look at the initial allocation prior to the portfolio optimization, you'll find that those numbers are working against them. So it's a matter of stacking the deck of cards in your favor, and that's what we can do to help you out.
Make sure you've got a winning game plan. Of course, we all want that next home run stock, and those are exciting, right? But as we know in baseball, the people who have the most home runs also tend to have the most strikeouts, and that's not something that you want, especially as you're getting closer and closer to retirement. Consistency is key, and if you need a little bit more of a consistent, portfolio, the team at America's Retirement Headquarters, they can help you out. All you need to do, take that first step, reach out, give them a call, 419-794-3030. Don't forget, as Nolan said, take a look. You can watch that video on the independent income system. Just go to Google, type that in, and then while you're there, open another tab. Go to the website if you want as well, arhq.com.